Banks are the foundation of any economy. Indeed, even the Federal Reserve is really a bank, yet dissimilar to some other bank, it makes cash. Yet, imagine a scenario where I let you know that each bank has the option to make cash. Hypothetically, you can begin a bank and begin making cash, however there is a simpler way. For what reason are we such a lot of cash initially beginning a bank? At the point when you can begin a digital forms of money and turned into a crypto extremely rich person short term, basically that is the thing has been going on of late. On the off chance that digital forms of money appear to you like a trick, you presumably have barely any familiarity with the financial framework. So here in this video, we will investigate 5 truths about cash that banks don't believe you should be aware, since, in such a case that everybody would realize that may destroy the financial framework. However, as Henry Ford said, all right individuals of the country don't get our banking and checking framework 40th day days. I acknowledge there would be an uprising before tomorrow first thing. So accepting at least for a moment that you're ready, offer this video a feel free to try to take a gander at our other video where we moreover post accounts about placing assets into cash, yet likewise about various things that you will consider to be captivating. Accepting you participated in this channel, you will assuredly participate in our ensuing channel. So go ahead and purchase in. Also, as of now could we return to the video? Number 1, keeping your money in the bank is a stunt. Permit me to present you a request. How much premium would you be able to acquire expecting you store your speculation assets in the bank? From the start it seems like essentially several percent for it to have all the earmarks of being genuine, right? Regardless, expecting you look at the numbers, that is far from that. The top banks like the Citibank, for example, offer from a genuine perspective under 0.5%. There are banks that offer a higher rate, yet they're as yet under 1%, especially since credit charges are at the base. As of now think about it. Your money creates by 0.5%, while development is 2.5%. The trademark worth of your overflow is from a genuine perspective reducing every single year. You're clearly in an ideal situation spending that cash today than keeping it in the bank. The purchasing impact of your money in a few years will be irrefutably shy of what it's as of now. Likewise, when development is taking off, as it's presently, for example, asset costs, for instance, homes, stocks rise significantly, as we have seen happening the last year or something to that effect. A bank is a spot to stop your money and not to acquire cash. Number 2, each bank has the option to make cash out of nowhere. Assuming I would let you know that banks really do make cash, you most likely need to accept me in light of the fact that the main bank that is permitted to make cash is the reality. It's the wellspring of the dollar and the main foundation that has the privilege to that printing machine. Notwithstanding, the financial framework works so that each bank in the nation, or truth be told the world, is permitted to make cash partially founded on how much individuals have stored in that bank. Suppose you store $1,000 in a bank. What do you believe that bank will do with that cash? It is an exercise in futility to keep it. They wouldn't have the option to pay you your hopeless 0.5%. So the bank loans your cash to another person who needs to purchase a vehicle for instance, or a house, and gathers revenue, which frequently a lot higher than 0.5% that it pays you. A normal MasterCard interest is 20%. That is in a real sense many times higher than whatever the bank pays you. The fact of the matter is that the bank won't advise you to hold me to a loan your cash. Whenever you check your record, the bank will show you that your cash is still there in the bank. You can pull out it at whatever point you need. So assuming your cash is still there in the bank, where did the bank take the cash to loan to another person? That is known as fragmentary save banking. Banks that are permitted to keep 10% of the stores and mix the rest. For each $1,000 you stored in the bank makes another $900 and loans it to another person, which carries the aggregate sum to $1,900. The bank made $900 out of nowhere. It's not quite as troublesome as you could naturally suspect since they are simply in the PC. Number 3, you can bring in cash by acquiring cash from banks and contributing it somewhere else. In July 2012, Mark Zuckerberg supported his $6 million Palo Alto Murmur. That is 3 miles from Facebook's Settle with a long-term contract. Around then, he was 28 years of age and the world's 40th most affluent individual worth an expected $15.6 billion. The inquiry is the reason: could you get into obligations when you have billions of dollars and can undoubtedly bear the cost of it? In the event that he needed, he could undoubtedly purchase $12.6 million homes in real money without so much as a second thought. So why get a home loan? It's free cash sounds incredible. I comprehend who might give you free cash when you're a very rich person. All in all, how could anybody give any other individual free cash? What's more, how about it's charity? Everything has to do with loan costs. Presently, recall when we discussed banks giving such a low ROI that it doesn't worth keeping your cash there since it doesn't beat expansion. So you're losing cash. Indeed, in this situation, it's the reverse way around. The expansion rate in the US is 2.5 to 3%. So any cash you can acquire is beneath expansion rate is viewed as free cash. Zuckerberg contract rate was somewhat more than 1%. Assuming you figure it out, the banks is the failures. Since the home loan rate is underneath the expansion, doesn't need to be the virtuoso to figure it out. For instance, suppose you get $1 million at the pace of 1%. The normal pace of return on a bank account is 2.4% before the pandemic. What's more, presently it's under 1%, yet we should simply take 2.4%. Intending that assuming you store that $1 million in another bank, you wind up making $24,000 every year. While you just need to make a regularly scheduled installments of $10,500 to the bank that loan you that cash. Suppose you do that with $100 million, or what about $1 billion when you can get cash for nothing? There is no good reason for tying up your own cash when you can involve that cash for more beneficial things. Obviously, when we are discussing modest quantities of cash, this probably won't have sense in light of the fact that the effect isn't simply large. Be that as it may, with regards to enormous sums, messing with 1, 2, or a large portion of a percent might actually mean many a huge number of dollars. On the off chance that not hundreds, number 4. The more extravagant you are, the lower the rates you get. Recollect that banks are not cause associations, but rather they are organizations like some other whose occupation is to augment benefit. They have investors to whom they're responsible. Furthermore, in the event that their plan of action won't be beneficial, they won't get by. That is the reason they're considerably more happy with loaning cash to a rich person than an unfortunate person. At the point when you're an extremely rich person, for instance, the banks can rest calmly on the grounds that nobody is stressed that you could default on your advance. Also, on the off chance that something occurs, on the off chance that you can't make your regularly scheduled installments, you can undoubtedly offer piece of your business to repay your home loan. Think briefly about what's the significance here. Your charge card obligation isn't similar to a home loan. It isn't similar to 3.5% per year. It's presumably similar to 20%. On the off chance that you can't pay your MasterCard obligation on schedule. Presently, what makes you believe that you can pay it in a couple of months some other time when that obligation has developed a lot greater? All in all, 70% of Americans are going to fall into the obligation trap. Over portion of those reviewed, 56% say that they've had a charge card obligation for at minimum a year, and most will keep on conveying it for quite a long time into the future. Practically 20% gauge it will take them over 3 years to take care of their obligation. Was generally 8% say that they don't have the foggiest idea when they will actually want to settle. Furthermore, that is the way banks typically make fortunes, on the grounds that a great many people spend without contemplating how they will repay. They're utilized to a specific way of life and they're prepared to keep it, regardless of whether they can't bear the cost of it. That is the reason banks continue to call you to sell you a fresh out-of-the-box new charge card. Try not to misunderstand me. Utilizing charge cards capably is extraordinary to assemble your FICO rating, yet in the event that you're not monetarily capable, then you shouldn't find yourself mixed up with that obligation trap. Assuming you have partaken in this video, you will undoubtedly partook in this custom playlist that I have made explicitly for your. That has our most famous recordings in business, putting resources into the securities exchange that might actually transform you. What's more, presently offer this video a go-ahead that it merits and make a point to buy in on the off chance that you haven't done that yet. Remember to actually look at our subsequent channel. A debt of gratitude is in order for watching. Furthermore, until sometime later. If you found this video helpful, make sure to give it a thumb up and share with your friend. Thank you for watching.